Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello everybody, welcome back to Power Trading Radio. Enjoying one of our longest hiatuses we've done in quite some time. What we were gone Wednesday, Thursday, Friday, of course Saturday, Sunday we didn't have a show. And back on Monday, I'm going to leave one news announcement. I was informed today that OTA is having their holiday party tomorrow, right during the radio show, which means no show tomorrow as well, but we will do in the remainder of the week. So sorry about that one. I know you guys are probably expecting to have Sue O'Grady on tomorrow. It's her lucky day. She got out of being on Power Trading Radio. Anyway, hope you all enjoyed the fireworks that happened over the weekend. Of course, it's Tweet Fest 2019 continues. A lot of those tweets impacting the market significantly on the open, and there's some other pieces of information which we'll look at here shortly, which certainly caused a little bit of volatility out there. Now, I want to say hello to everybody. We got Deep Truth joining us today. Well, hello, Ruben. Good to have you back. Albrecht and Patrick as well. Good to see you guys for our Monday session. And those of you on the Online Trading Academy YouTube channel, don't be afraid to say hello and ask questions as we progress through today's show. I just saw Tim Blotzer. He sounds like a drunken sailor right now. His throat's really raspy. I think he's got a cold. So we might bring him on for one segment. We'll see how long his voice lasts him. I may actually cut him loose here. So if you guys have some options questions specifically for Mr. Blotzer, let us know. Send them on in at powertradingradio.com by clicking that Power Blast button, or you can go to our YouTube channels, broadcasting under Online Trading Academy as well as Power Trading Radio. All right, let's dive into the dirty stuff with our markets today. Bitcoin continuing to look pretty weak. Simon, who's at the helm today, is going to bring you up this chart of the Bitcoin over the last, this is just the last 24 hours. You got about a 1.12% slide in the last 24 hours, although you'll notice that earlier it was down much more. We were all the way down to 7,200, almost maybe even breached that. Yeah, 7,197 is what we reached right around 10 o'clock p.m. last night. Right now we're at 7,335. That's an $82 slide, or I mentioned 1.12%, and that is actually your worst. It's actually tied for your worst. From there, we will go to the NASDAQ, which had a brutal candle today. I mean, I actually like it. I think it looks awesome. But you guys can see, Simon, if you wouldn't mind, take go to the chart settings and take out the high and low. I think, the high and low is just going to get in the way there. That's perfect. Thank you so much. There you go. Look at that beautiful sell-off today. Coming actually right into an area of demand. We'll see if that holds. We had that line drawn on the chart. They're outlining kind of a floor. You guys can see it. Simon, zoom in just a hair so we can see that line. Yep. You'll notice that this low, which we've put in, was, it's been hit a bunch, really, on the last few weeks, the 22nd, the 21st of November. It really kind of reiterated that that's a base, and all of a sudden today we came right down into it. Anybody who's using supply and demand principles, that was definitely a nice buy point, not the highest with regards to odds enhancers, but all in all, an ugly day for the NASDAQ, which may present a buying opportunity as we talk about buying on pullbacks. All right, that number though, down 1.12%. That was a 97-point slide for the NASDAQ Composite, finishing the day at 8,567. I'll round up to 68 there for the NQ. All right, Russell 2000, RTY futures, what we're looking at next. It was bad as well. Now, I do think that we're going to go back and test this kind of horizontal range that Simon has mapped out in this little, I'm guessing that's magenta. Is that magenta, Simon? Is that blue? I don't know. My color blindness sucks. You should definitely not have me in an art class. You see the candle's bad, but not as bad as it was with the NASDAQ Composite today. It did bounce off at session lows a little bit, but it still has a way to go to me before it finds real demand. On the day, though, the Russell 2000 was better than the NASDAQ, was only down 1.04%, almost a 17-point slide to 1607. All right, number 4, getting us ever so close to the podium, but missing it yet again. The S&P 500, which was only down 0.86. Notice its technical shape, though, came right back down. I still believe you have a little bit further to go before you hit any real area of demand on this one. S&P finishing the day at 3,113. Again, a slide of 0.86%. Or 27-point slide. All right, podium time it is. I think when you have big sell-offs like this, it's generally a big update for gold, but there is some pressure out there. It did not have the inverse relationship that it normally does. Gold was down as well, 0.29%. We've got all kinds of lines still drawn on this one. We'll just leave those until they don't have any sort of validity anymore. Technically, it's no big deal. You notice this candle where Simon has his cursor on right now, not really that big of a deal. It was down much worse this morning, although finishing the day rather strong. On the day, you had 1,468 was your final for gold. That's the December 19 futures contract. That was a slide of 0.29%. Okay, now it's not all bad news. We have to have something positive to talk about. Let's go to black gold, Texas tea, crude oil today. Nice chart here as well. It came aggressively down into an area of demand. Boom, hit it. Bounced off a little bit today, making it one of your better performers. 1.43% to the upside is what we saw for crude oil out there. That brought it up to $55.96. We're actually 2 cents higher in our after-hours session. So all in all, kind of a nice technical fall into an area of demand. We'll see if that has any follow-through. As you can see on this chart, really going back into October, it looked pretty darn good. All right, now the best performer, going back to interest rate products, we're going to go look at the 10-year futures product, which is the ZN futures. That's your Treasury note. Technically, nothing that great. We did break down below this little purple, I can't, colorblind, I got to get those colors, magenta box, I guess. So now it seems like we're going to go and test new lows. I kind of felt like we were going to drift back up, maybe break some highs here, as it feels like interest rates are going to keep falling. That would mean that the price of this bond product would move to the upside. Instead, yields are climbing, which makes the bond prices fall. We are up 3.38% for that 10-year today. That brought it to 1.83 on the session. So you're seeing a little bit of a sell-off here in that 10-year futures note, which it seems to be continuing this bigger trend starting in September, which has been a series of lower highs and lower lows and just more drifting to the south side. All right, that was our top 7 markets out there. Hopefully some of that put a little bit of green in your pocket. I know those of you who are trading anything related to the dollar, you had a lot of activity going on. Those of you trading the Australian dollar, let me get you the exact time that this one will be happening. We have a rate announcement happening for the Australian dollar, and Simon will tell me, he's bringing it up on my side screen over here. Yeah, you have the rate announcement, which is going to be at 7:30 tonight. That is going to be just a few hours from now. That's Pacific time. So right now we're at 3:06. So you've got about 4.5 hours till that comes out. But right now the expectations are they're staying at 75 basis points. Anybody trading that Aussie dollar, be very careful. You could see a lot of movement when that announcement comes out, regardless of where they keep it. If they keep it the same, cut it or raise it, it's still going to have some pretty sharp moves right as that announcement happens. So be careful out there. Okay. Where's some other noteworthy things today? There were 3 major announcements, right? Of course, you have President Trump and his wonderful need to tweet out things. We just decided to slap some or re-put on tariffs to Brazil and Argentina, which of course shot our market down. We opened up significantly lower and proceeded to show some weakness before actually coming off those session lows. That was one of them, but I wanted to look at other things out there. I told you that I would start bringing up more charts to help you understand the patterns and shapes and trends of current economic data. Now, there was some data that came out today. I'll read a little bit of it to you. I actually got a question from Ken on this one asking about the construction spending numbers that came out today. They were far worse than expected, but you also have to understand that we're in the midst of a very stormy season. It hasn't just been the last couple weeks. It's been, last couple months, there's been some significant storms going on around the country. What that means generally is construction spending will slow down significantly, right? So they were expecting a 0.3% gain, so 1/3 or 1% gain in construction spending. We actually came out at negative 0.8. Normally you would think that that's bad, but if we were to look at the chart historically, this one fluctuates wildly. I don't see any trend, so I didn't think it was worth sharing that chart for you. What I did see that was noteworthy, Simon, go ahead and bring me up the ISM manufacturing PMI numbers. I think that this one starts to become a little bit more relevant. Now, when you look at this chart right here, this is the ISM manufacturing PMI, and what it represents, they basically go out and survey 400 purchasing managers, and it asks them about things like business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories. So it's basically how do these purchasing managers feel about the manufacturing space? And you can see that it's been in a serious decline, right? We peaked out in mid-2018. I think a lot of this may have had to do with the trade wars, and we are now underneath that 50 mark. You've heard me say this many times, where being above 50 shows expansion and optimism, being below 50 shows contraction and pessimism. Now, what's not really surprising is the estimates, which are these little orange dots that you see on the hard red edge. Simon's moving his cursor over it. Those have been showing an expectation that things may be getting better. Well, it's actually staying down below those numbers. We came out today at 48.1. We were expected to be at 49.2. So while it's not like a huge miss, it is showing a continuation of a period of weakness. Now, that may get worse. Of course, back in 2008, we saw this just plummet down below it. Of course, I don't have the data going all the way back there, but we're nowhere near the 2008 levels. Just wanted to show you this as a piece of information that you should be paying attention to, because if manufacturing continues to slow down, this number will continue to drop, and that could become a drain on any upward movement that this market has. Of course, as traders and investors, our goal is to really look for all those factors which could push this market even higher or could potentially stall it out and see that big reversal. There's always that balance of data that we have to evaluate. We've been talking a lot about the favorable data right now, which is mainly the Fed. And I do believe the trade war is actually acting as a positive piece for this market. This is one of those pieces that isn't as mainstreamly talked about. You're probably not going to hear Mr. Trump talking about the ISM manufacturing PMI, but it's something that we should keep an eye on as traders because it is one of those very important factors for our economy, especially when we see our GDP growing at about, 1.8%. This could be a big factor out there. All right, that's our opening segment for today. I'm not sure who my guest is going to be right after break because I actually saw Sue O'Grady walk by. Maybe we got the switch. Maybe we had Tim Blotzer, whose throat can barely even open to talk. Maybe he took off and had Sue O'Grady. Either way, we're going to have a guest on our show right after a quick break. If you have questions, feel free to send those on in at powertradingradio.com. If you'd like to know more about analysis like we did here, you can click that link, which will show up in social media. That'll tell you which of our 50 physical brick-and-mortar schools are nearest you. You can find out more information about all our courses and options, futures, forex, commodities, and much, much more. So send your questions. We'll be right back after a short break.
There are lots of different reasons why I teach. I know what it's like from the beginning because I was a student here. I love going around the classroom and you get those aha moments where, slowly those light bulbs switch on as the week unfolds. And for me, it's magical.
I've been telling students for years that I derive professional satisfaction from sharing my knowledge about trading. I grew up on the floor of the Board of Trade. My father was my first mentor.
I like to see people run. And in order for them to run, they need to walk well first. And for me to help them build a solid foundation and then watch them go forward, that's something that money can't buy.
What these people are now realizing is the freedom that they have always wanted to achieve. And it's quite humbling and honorable experience to be able to know that in some small way I contributed to them.
The students make the academy, and I meet wonderful people from all walks of life, and they always have a story to tell, and the story is always interesting.
Being able to explain things in a way where the light bulb goes off, and that gives me the chills. It's a wonderful experience to see that growth in somebody else and that you're a part of that. It's magic.
The students, I really want to enable them to bypass the challenges that everybody goes through.
There is rather a selfish aspect, and that selfish aspect is I have found more of me as a person. Just a self-discovery.
And in every class that I teach, I get to share my knowledge, and I get to see each and every one of my students learn how to trade in a bull market and in a bear market and even in a sideways market. And each time I see that student of mine take that first trade, it's such a rewarding experience. It's awesome.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello everybody, welcome back to Power Trading Radio. It is your Monday edition with a slight change of plans because normally on Mondays we talk about the equity markets, and I'm proud to say we have two great options traders here in Irvine, California this week. And we were supposed to have them on today and tomorrow, but tomorrow we're not going to do a show, so Sue O'Grady got off the hook there. But Tim is on the hook, and what's funny is his voice is in bad shape. He's struggling to do it, so we'll try to keep his talking to a minimum. What we thought we would do is we're going to actually implement a mime show today, so you might get prolonged periods of silence for those of you that are listening to the podcast. Just know our fingers are moving, and we're actually talking with sign today.
My voice is just fine. I don't know what you're talking about.
I appreciate you coming on today. I know you're under the weather.
No problem.
All right. I'll start off with a listener question just to encourage our viewers out there, because there are lots of questions you have. Ask them. If it's an options one, send them on in at powertradingradio.com by clicking that Power Blast button, or go to our YouTube channels under Online Trading Academy or Power Trading Radio. All right, Esther sent this one. A question for Tim. Can his option strategy be done on a set and forget trade? For those that might not have a clue what that option strategy is, let's do kind of the high level idea of what that option strategy entails, and then we'll talk about its applicability to a set and forget.
Well, when you're putting on a trade, you're going to set a target for where you want to get your profits. The other thing is you're going to set a stop order that protects you and keeps you at a minimum loss. Can you do that? Absolutely you can do that. I don't like the term set and forget.
Right.
I'll set it and keep an eye on it. And if the stop order's there, and usually I'll set the stop when you can't watch it, or you set a trade up, you're going to work, you're not able to watch it, you better have a stop on there.
Sure.
But I don't forget about my trades. I'll set an alert and a stop.
And there's a lot of people, I think that this is the important part here. I've mentioned this in the past regarding different people's trading perspectives and objectives. If you're a short-term intraday trader, it's really difficult to set your entry, your stop loss, and price target, and then put it in the system and let it do its thing. That's more challenging. So normally for the day traders, it's going to be more of a manual type of a system. You're going to open a trade and you have your finger over the sell button when it gets there, but that implies a lot of trust in yourself to pull the trigger when you're supposed to. For those that might have slight discipline issues, don't pull your trigger when you're supposed to, you should always put in a mechanical stop in the system. Now, the set and forget, for those that might not know what we're talking about, is where all the variables are covered. So you mapped out your trade. And one thing we would teach in class, one thing Tim's doing in his class today, same thing with Sue O'Grady, saying, look, when we make a trade, entry, stop loss, price target, where are we getting out? And some of you could put all three of those variables in the system. So if you're using his option strategy, you could do that. You could say, here's my entry. If it falls to this value, I'm out. If it gets to this value, I'm going to take profit. So yes, you could do it, but you don't.
Yeah, and my overriding philosophy of all that is what I say all the time. It's not the money you make, it's the money you keep.
Right.
It's easy to put on a trade and get the money, but then it's managing it afterwards. And I hear a lot of times, well, psychology doesn't really play in trading. It's like, then you've never traded before, because psychology is huge.
Absolutely.
And they say the furthest distance you'll ever travel is the 6 inches between your ears.
Is that what it is? I haven't taken the tape measure. I think I might be at 5.5. I feel like I'm getting... all right, this is an interesting one. I'll have to call in. This is a question from Merlin. I trade futures and live in a converted ambulance. Okay. Seems like all brokers want $1 billion liquid and physical address to get approved. They don't want $1 billion. They certainly need to have some capital. A lot of it will revolve around experience in the futures markets. Physical address, I'm not so sure about that one. I mean, I've never had that problem because I always have a physical address. I don't know, maybe you could set up with a P.O. box, but they probably want a physical address. Do you have family and friends, someplace that you stay and park your ambulance at? That might be a physical address, but generally opening up accounts isn't that challenging. A lot of it comes down to experiences where they draw that line. You notice wherever you open an account, they'll always ask you, whatever asset class it is that you trade, they say, how much experience do you have? How much experience do you have? And before you jump into any of these asset classes, it's in your best interest to have some experience in it so you don't get burned making the wrong decisions.
Well, I've heard that a lot of the senior citizens that get in their motorhomes and travel the country, they buy like 1 square foot of land in Wyoming or Montana. Yeah. That's their legal residence.
Just big enough for a mailbox?
Everything goes there. And then you call up and say, okay, send it to me here. So maybe that would work. I don't know.
Yeah, maybe. Or just check with them and see what the requirements are. Let's see, there was one question. Let's scroll up here for the Power Trading Radio YouTube channel. Okay, Boba Fett. Welcome, my Mandalorian friend.
Wow.
It's so funny. The term Mandalorian used to be this kind of cult little thing that really like Star Wars fans knew. Now all of a sudden, I'm in a bunch of cosplay groups where people make costumes out of foam and 3D printing, because that's what I like to do. Now everybody's making Mandalorians. They all want to be Boba Fett. So Boba Fett,
isn't that the instrument you played, the
no,
Mandalorian?
No. That's more like this.
That's in the car.
That's in the car. That's it. Let's see. Boba Fett says, regarding SPX weekly short-term trades, assuming short credit spreads, how do you pick your short strikes, deltas, chart zones, or both?
Yes.
Okay.
All of the above. But it all starts with core strategy. And these days, using a shorter term trade, I'm looking at a 60-minute chart to set the zones. Because, doing a daily chart, it just wasn't working. And thanks to Brandon Wendell, he said, put it on a 60-minute chart so those zones work there. And then I go outside the expected move, and then I'll look at between 11 and 18 delta. And I don't get greedy. And especially these days, if they're going to pay me 50 cents on a short-term spread, no thank you, I'll go further away. If I get 30 or 35 cents, that's okay. But when we have no volatility, I don't expect a lot of premium. But if they're paying me a lot of premium, no thanks.
You got like days like today where you probably got a nice spike in premiums.
Yeah, it spiked up a little bit. I got 65 cents
on
both sides. So I'll take a 15% return for one day.
He asked, does one of those dominate the chart zones or deltas? I'm going to probably assume that the zones are the more important piece.
Well, it all starts with that. I wish there was just one thing you could look at and say, okay, I make the trade, but it's not like that. You look at the chart, and with selling options, it's where is it not likely to go anytime soon?
Right.
And then I'll go in, set those zones, see if there's any money there, and then I want to be outside the expected move, so I have a high probability of success in that trade. 80-90% probability that option will expire out of the money.
Right. And so I have to say this real quick with like an asterisk, because everyone hears that and they say, 80% probability. I have to be doing that. Understand, guys, that those aren't your grand slam trades. Those are, you said, your fast nickels.
Conservative, consistent return. Fast nickels instead of slow dimes.
Right. So, imagine instead of, picking up $1 bills and $10 bills, you're picking up nickels. It's maybe a little bit more work, but you do have the consistency in your factor. And that goes back to everything we teach, which is really about these scales of risk versus reward. If you have very low risk, then your probability is probably going to be better that you're going to be successful at it. The rewards for that are probably going to be rather low. If you have very high risk, right, the odds are you're going to take a lot of losses along the way. Some of those losses might be very big, but you may be rewarded with some monstrous winners. Kind of need to figure out which side of that equation you want to be on, because for some people, like myself, taking a big loss, it doesn't bother me so much as long as I plan for it. Others, one key point here would be someone like Roger Best, right? Roger Best has said that the largest loss he's ever had is like $800, which just blows my mind. Yeah. I think it might even be less than that. $800, I laugh at it because that's like no problem. I'll leave $800, no problem.
That's lunch money for you.
Then he said he was all frustrated and really upset that he lost $800, and I'm just chuckling. I'm like, yeah. I told him my biggest loss ever, and he was just kind of like, oh God, how do you live? Like, yeah, it was a tough one.
I have the stock of which not I speak. That was one of those kind of losses.
We all have. I think the audience laughed when I told him this one probably a couple years ago, but I was in a Cisco trade that went so bad against me, I wrote a song about it. I haven't played it yet. I think one day I'm going to just bust out a guitar on the show, guys, and start playing this song. But it's based off of Creedence Clearwater's Lodi, because I'm stuck in Cisco again.
I used to have a Safeway store in Lodi.
Oh, yeah?
One of my stores.
Oh, boy, Lodi. Okay.
Great town.
Yeah, a little quiet for my taste, but let's see. All right, I'm looking through here for questions. I know we've got a whole bunch of different things coming through. So I have a question.
I have a question for you.
Okay, I love it.
What do you call a sheep that can sing and dance? I think I told you this last time.
You expect my memory to remember these things.
Lady Baba. But what do you call a computer that can sing? Adele.
Oh, man. But I'm dumb. We should do another show where it's just dirty jokes, because TJ would win.
They're all clean.
Nah, yours are all clean. All right, let's do this. Let's take a quick break. When we come back, we'll go to more listener questions. If you have some for us, let us know what they are. Send them on in at powertrainingradio.com. You can click that Power Blast button. I know we got a pretty good active group out there today on our Power Training Radio YouTube channel. So hello, everybody. Send your questions in for Tim Blotzer. We will get to those as soon as we come back, right after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Hello, everybody. Welcome back to Power Training Radio. It is your Monday edition, normally an equities day. Today, we're talking options. We have Tim Blotzer here in studio, who's teaching an options class here in Irvine, California. Hopefully, you guys are into the options thing. I had a question from Mark that came in. I'll read this one for you. With regards to options trading, what are some of the realistic expectations about how much money can be made? This one I think is I don't know, everybody asks this about every different asset class, right? Mm-hmm. Everybody wants to have that get-rich-quick asset. We know that there's different risks and rewards, as I mentioned in the previous segment, but let's keep it real. And what's a reasonable expectation here, or what should someone expect?
I set a goal to make 10% a month.
Okay.
Because that's what I had to start. When I was taking care of my dad, I had to make $5,000 a month, and I had a $50,000 account. So my goal was to make 10%.
Okay, that's great.
Not crazy, and now it's still the same goal because one of my rules is I don't trade real money when I'm teaching a class.
Okay.
I'll do it when I was home, and I just came off of 3 weeks in a row without making a trade, so that was kind of tough for a while. But it's, I think that's a reasonable goal, but you've got to figure out what money do I have and what do I want, and where it all comes down to is what's your why. Once you figure out your why and how much money you've got and what do you need to start with. My first goal was if I can pay my monthly bills, I'm money ahead.
Right.
And then it was now, how much money do I need to live the lifestyle I want? So you got to be realistic, and I think no more than 10% a month it's always been my goal.
And I think that for somebody starting out, personally, I think that's an unrealistic goal. I think as you get more experience, it's easier, but you have to look and understand that the average rate of return for the S&P 500 going back to the 50s is about 8 to 10% per year. So you're 12x that, which is great. But I think the reason that people fail at is they'll set that expectation of 10% per month or whatever you want to say, and they will be overly aggressive to achieve that. They take unnecessary risks. And when the risks are mapped out and the trading plan is there and the rules are followed, you don't have those big steps back, because I've seen traders who will have, let's say they take 5 trades, right? Mm-hmm. First one, they make $100, and let's say they got a $10,000 account, make $100, next day 200, next day 300, they're up $600. Next day they make 100, they're up $700. Next day they lose $3,000. Yep. So here they are, 80% correct in their trades, but they're massive losers because of discipline and risk management. So if you ever want to achieve any sort of a high rate of return that's going to beat the market, you can never let anything get so far against you. And to me, that's one of the major problems is when you hear 10%, which is what everybody watching right now would love to have, it's attainable, but only if you are such a disciplined and strict risk manager and money manager.
That's why I say, sitting on top of my computer screen, don't be stupid, don't be greedy, follow the rules. And here's kind of a good example. Email I got today. Tim, I'm smiling. First time in 6 months. I made $35. I swear I could hear your voice the whole time. Don't be greedy. Don't trust that strike above all one. But it was thank you, thank you, thank you, thank you for $35.
Right. And a lot of people are going to go, $35, who cares? It's this process is in place.
Right. And next time maybe it's $350.
Right.
Next time maybe it's $3,500. Depends on your account size and what you're doing. But the same rate of return will be there.
Yeah.
I don't know what his account size is or anything else, but you just take it a step at a time. This isn't get rich quick.
No.
It takes time. It took me 3 months just to get a handle on options, and would have been quicker if I didn't have 2 months of being stupid.
Right.
Because I didn't listen to what I was taught. And that's probably, this came up the other day. We were going around, why aren't you trading? Why aren't you profitable? What's happening? They won't follow the rules.
Right.
You get into trouble.
And on Scamble, and this is interesting because you have a bunch of different perspectives on it. I have trader friends who for 10% a month is not that much. To me, it's getting pretty aggressive. And Scamble's going, 10% a month, that's insane. Yeah, I think it is. For people who don't understand markets, it is. But what's important, and here's an easy goal for you to set. And I think everybody should start here. If you are getting into the markets, whatever asset class it may be, and you just want to equal the markets, then just buy the SPY. Save yourself a bunch of grief, right? But if you want to beat those rates of return, you're going to have to do something more proactive. You're going to have to apply market timing principles. You have to look really at where supply and demand is and find those optimal buy points and be a little more active. I'm not saying you need to be high-speed day trading every single day, but we need to pay attention to these market pullbacks that just happen and look for more buying opportunities if that's the case. So, it's critical that we understand if we're looking to get that alpha, which is what's a percentage that's greater than the market, you're going to have to do something different than just buying the market. If it's using Tim Blotzer's strategy on SPX, great. If it's using Tim Pessett's thing with the Forex and currencies, great. If you want to lose stocks, great. That's fine. But there needs to be that plan in place. And my goal has always been just to beat the S&P 500. And it used to be, my goal was, okay, I upped it every year. I'd be like, okay, I want a 30% rate of return on my account this year. I want to get 40%. And I remember I had a 40% goal target for a year, and I got like 36, 35%. And I was so upset with myself that I missed my goal. And I look at it and go, it was a hell of a year. It was a year that was up like 3%. And I'm like, I did great. So for me, a nice benchmark is just beat the market that year. And if you do it every single year, then you are going to grow your account at a much greater rate than everybody else, especially those who are buying mutual funds and index funds. If not, if you don't believe you can do it, if you don't want to take the time or the effort to be more proactive, then just go and buy some ETFs that reflect the overall market.
And what I always tell students is you start out with simulated trading. And you do it kind of in 3 steps, 10 to 20 paper trades a week. Step 1, how do I hit the buttons? How do I get in? How do I get out? Do that as many times till you figure it out. How do I monitor my trades? Step 2, now start following your rules. Follow the rules in your simulated trade. Step 3 is now trade that simulated account as if it was your real account. Follow your rules. And then once you've got 70 to 80% success rate in that, go out and start with real money, 1 contract. I don't care how big your account is. 1 contract when you start. And if you get good at that, you go to 2. And then you gradually step it up.
If you're not making money with 1, jumping to 10 is not going to make you more money.
If you're not making money in simulation, then something's really wrong, because you never lose in simulation, right?
Lose. Oh, right. Yes. Simulation is like having your first experience with a member of the opposite sex with a magazine. It's just not the same thing. Oh, I went too far on that one. Let's see. Don asked, Tim, when did you start options trading?
2004.
Okay.
I started with stocks, and because I couldn't buy a lot of shares of a good stock, I started buying cheaper stocks, and I got my butt kicked. So then I had a coach at the time said, look, you need to learn options first. So by 3-4 months in, I started trading options back in 2004. And back then, the market was easy, not like it is now. It was just buying calls and doing stock splits. But ever since 2008, I've basically been looking at credit spreads, because I don't have to be right.
It just can't be really wrong.
It just can't be really wrong. And just basically been doing the same type of thing for the last 11 years. It's still in beta testing, so we'll have to see how it works.
Yeah, it's still beta testing. Well, it's one of those things where you found a niche. Let me ask you this one. This is a little bit different question, because I think when people hear your strategy and the style, they all want to flock and do that right away. And maybe we can explain something to me. I'd love to do a psychological experiment, because I have taken a classroom of students, and we've spent, this is a paid private event, where we have spent a full day just going over step by step exactly what I'm doing on a trade. Right? Here's my analysis, here's my planning, here's my execution, here's tracking, monitoring, all of it. And no one from that class can replicate the trades that I was doing. Everybody was different. So why do you think that is? Because I know people want to go, oh, I want to do what Tim Blotzer is doing, yet they may jump in there and they're still not going to achieve it. Some might do way better, but some aren't going to achieve those types of returns. Why is that?
I think that's the psychology. And I like to think I make killer ribs, and I've had people ask for the recipe. And it's like, okay, here's the recipe. Okay, let me know how they turned out. This one guy, I said, well, how did the ribs turn out? He said, well, I didn't boil them in beer like your recipe called for. I soaked them in beer overnight. And I didn't barbecue them, I put them in the oven. And I didn't use barbecue sauce, I used chutney. I think that's kind of a different thing, why did you even ask for the recipe?
Right, if you're going to modify it.
Why have rules if you're not going to follow them? If you're going to walk through the minefield, I want to follow somebody. I don't want to create my own path. Let's find something that's working and works for you. Then down the road, if you want to adjust it a little bit, okay. I think that's just human nature.
It is.
Because what I hear a lot of the times is, it can't be that easy. There's got to be more to it. So I'm going to go do something else.
Right.
And they screw up the trade.
And it's never easy. I mean, once you get it down, okay, it's easier, it's a process, but there's always challenges, guys. I mean, I've been doing this a long time, and it's still...
This right here.
It is, absolute mental game. All right, I didn't get a chance to prep this one. We are right near the end, and Tim's voice, as you can tell, is starting to crack up just a little bit. Sorry.
Just a little.
Tom, this might be a tricky one. He says, I bought AUPH. I think this might not actually come to a fruition today because we don't have an options chain.
UPH?
AUPH. Simon, if you wouldn't mind, bring up AUPH, and I will read these numbers to you, and you can, AUPH.
What is it?
I have no idea.
Me neither.
Oh, we got a forward slash in this time. You got to go AUPH on that one. It is. Oh, farmers. No wonder I can't trade it. It's a drug stock. Oh, goodness gracious. Arinyanya Pharmaceutical. He says, cover call question. I bought AUPH at $7.05. I sold December 9 calls at $1.90. I see the worst case that the stock goes to historic lows around $5. Well, it's more like 4 and change, or 3 and change. The best case is that it stays below strike price and continues selling covered calls. The other case is that it goes above 9. And I'm called out with a profit and a premium. Is it a dream trade or am I missing something?
Well, first thing I'd look at is what's the liquidity? Is it liquid? Is it, how many shares is it trading? Usually I look for 1 million shares a day, look for 300 option contracts, even if it has weekly options. But what happens with a lot of these stocks, they only have monthlies. They don't have liquidity. My first response is next.
Yeah.
And I got scared away from pharmaceutical companies right when I first started because, you got to trade this stock. It's up for approval on a drug, and it was a $100 stock, and it dropped 80%.
It's got pretty low volume. I mean, if you look in the last month, it's got a lot of volume, but obviously look at the move it's had. This is certainly the catalyst for it. To me, this is one of those trades I go back to, and Tom, I'm not trying to be a jerk or anything, but you're juggling chainsaws with this one. This isn't juggling what Tim's strategy is like literally like 3 tennis balls that are soft and fuzzy, and you're not going to get hurt if you drop them. 2 of them, right? Just maybe 1. This one, you're playing with fire here. Yeah. Remember, something that moves up from $6 to $8, meaning it's a 30% move in a period of 4 days, has some major unknowns to it. I have a rule in my trading plan that I'm not allowed to ever trade biotechs or pharmaceuticals, ever. Why? Because I've been on the opposite side of something like this, and it smoked me. The liquidity issue might be a problem. Historically, we look back here, average, it looks like it's trading, I don't know, maybe 200,000 shares a day if we're lucky. Now all of a sudden, it's traded 2 million today or 3.5 million today. It's still a bit risky. I would stay away from it. I think it's a little too scary here. We are risk managers here, and I would definitely shy away from this one just from the risk factor.
Just looking for base hits instead of the home runs. It's always easy to see these after they happen. But could you have seen that coming? Probably has a drug up for approval in the pipeline. You got to be paying attention to that and a lot of other things. There's other things that will make you money safer.
I mean, you got in long at 705, which is right where Simon has his crosshairs.
It already made a move.
It made a huge move. And this thing already went from $3. It's up over 100% when you bought into it. That, to me, is chasing something here. Granted, this company could come out with a major, major drug, and it goes to $100 a share. But the risk involved in this, what I normally see with pharmaceuticals like this, is it has this 100, 150%, 200% move, and then all of a sudden it gives it all back in a period of days. So I'd be very, very careful with this one.
There was another one a couple of weeks ago, KXTX, or I don't know what it was, but it made a huge move from like $80 to $150 overnight, and now it's back down in the $70, $80 range.
Yeah.
So it's just, I'd rather have conservative, consistent returns. Yeah, drug stocks will go higher.
They might. But I'm done.
Yeah.
All right, Tim, you are here in Irvine, California, teaching this week. What's your schedule like? Are you going to be able to make it back home?
Yes.
You sure?
One way or the other.
Major storms are going through there.
That's all right. Got to have snow once in a while.
All right. Well, where are you going to go and soothe
week after
your
next,
throat?
Sacramento.
Sacramento. Okay. Well, driving.
And then Minneapolis in January, and back here in January, and then Woodland Hills in February.
Nice.
That I know of. And then Mastermind, I'll be on every Saturday in December.
8 a.m. Right?
I heard you talking about 8:30 was just fine.
No.
That's
on a Saturday?
On a Saturday.
No, I am a single guy, and I like to go out on the weekends. So
Well, I'm a single guy too, but I've always been an early riser.
Yeah, right.
Excuse me, because of retail.
Okay, that's it. All right. Tim Blotzer is in Sacramento, Minnesota, Irvine, Woodland Hills, and he does Mastermind.
Every Saturday morning. Every Saturday. I usually start about an hour early.
No,
so 7 o'clock.
Yeah, that's not
even better.
7 a.m. If you guys want to join that one and you are Mastermind members, I would encourage you to check your calendar and join that. That's always some good stuff out there. You get more insights into his strategy here on SPX and other things regarding options. If you are new to options, would like to learn more, click that link that's showing up in social media right now. That will tell you more information about our 50 physical brick and mortar schools, which one is nearest you. It might be Sacramento, Minnesota, Irvine, or Woodland Hills, where Tim will be teaching. If not, don't worry. There's 50 other campuses around the world to help you understand how these markets work and hopefully turn them to your advantage. We're going to take a quick break. When we come back, I have economic announcements and earnings calendar information as well. Stay tuned, everybody. We'll be right back.
My name is Beatriz Prado. I am from Venezuela, and I live in Seattle, and I am a very proud online trading academy student. I love hiking. It helped me to be in contact with the nature and to release a little bit. When I came to America, I was sad because I couldn't continue working in my job as a dentist. It was a little bit scary. I was concerned and I was thinking, what am I going to do? I needed to find an income. And then it was one day that another friend of mine told me about the Online Trading Academy. Then I went to the free class first and I completely loved it. I can say that Online Trading Academy changed my life completely. I am a new person and I don't have to work for anybody. This for me is financial freedom.
Hi, I'm Melanie Terry. I'm from Denver, Colorado. My daughter had been in the hospital for 18 months and I was scrambling to try to figure out how to pay the bills, how to take care of her. I saw no end in sight. My salary certainly wasn't going to cover it, and I certainly couldn't take time off every single day for 18 months to visit my daughter in the hospital. When I attended my first class from Online Trading Academy, I was really just hoping for some glimpse of hope that I could dig myself out of the hole in which I'd found myself. They made it very simple. Online Trading Academy does a fabulous job of taking you through step by step. It is about educating you for life, not just for the minute. I go to bed and I wake up every morning being grateful for the life I have. So when I'm out on the water in the middle of the day, when I know everybody else is at work, I feel like I've figured it out. My decision to enroll in Online Trading Academy was the single best decision I've ever made.
This is Power Trading Radio Live. Real people, real money, real trades. Visit us online at powertradingradio.com.
Everybody, welcome back to Power Trading Radio. Merlin Rothfield wrapping up your Monday edition. Hope you enjoyed having Tim Blotzer on the program today. That's dedication. He teaches all day, and even with that sore throat of his, he comes on the show and continue to deliver for you guys. So I'm happy to have him on. Hope you guys enjoyed that one. Tim mentioned he will be teaching in Sacramento, Minnesota, Irvine, Woodland Hills, and he also does a mastermind session Saturday mornings at 7 a.m. Well, it's 8 a.m. Pacific, but he says he gets in there about an hour early, so 7 a.m. So if you're an early bird and you want to learn more, I would encourage you to join those sessions. If you're not part of Mastermind or you're not part of Online Trading Academy, you'd like to learn more, again, click that link that's showing up in your social media right now. There are free classes, paid classes, community events, and 50 physical brick and mortar schools around the world, as well as online classes, and now coming out to everybody around the world, self-paced content, which we're building right now. We've already rolled out Course Strategy on demand, which is basically you can watch it from any device around the world at your leisure. We have futures being rolled out, and we will be doing Strategic Investor here very, very soon. So pretty excited about the on-demand product. If you'd like to learn more, click those links and find out. All right. Let's go to John Donato says, I love the Saturday sessions. If I could just get up, I would enjoy those sessions. I just can't seem to do it. Let's see. That's Monday's calendar, Simon. Could you bring me up Tuesdays? Yes, Tuesday. December 3rd. By the time December 3rd rolls around, we will have an announcement from Australia with regard to their rates. As I mentioned, that's going to happen here in just a couple of hours. Could be rather volatile, so be careful if you're trading that Aussie dollar. For the euro, PPI numbers. British pound has monetary policy report hearings and construction PMI. New Zealand has ANZ commodity prices, and Australia with their GDP numbers. Moving to December 3rd's earnings calendar, we got a couple of bigger names out there, right? You can see Salesforce, Bank of Montreal, Workday, AutoZone, Marvell Technologies, Donaldson Company, and Zscaler. There are more than this. There are obviously many more coming out with earnings, so you might want to check your earnings calendar before you get caught off guard. Now, I mentioned we have a slight change of pace for those of you who are tuning into the show and wanting to see Sue O'Grady tomorrow. I apologize. It's a holiday party for Online Trading Academy, and of course, I just got to be at a holiday party. I mean, who wants to? Holiday parties are the ultimate way to lose your job or to see who's not there the day after the holiday party. So I'll keep my pulse on who's getting out of hand, and somebody might be out of a job. I'll probably be here on Wednesday, but you never know the way the holiday parties go around here. So we'll be off tomorrow. We'll just do a replay of this show, and then we'll be back on our Wednesday show. So thank you guys so much for joining us today. Hope you enjoyed it. Again, if you want to learn more, click those links. Until then, happy trading, everybody. We'll see you on Wednesday.